Ethereum is sitting at $1,938 right now, and that number is either the last discount you'll ever see on this asset or a dead cat bounce before a brutal leg down. Let's figure out which one it actually is. Here's why this moment matters more than people are giving it credit for. ETH spent the better part of the last few months grinding in a brutal range. Confidence got wrecked. A lot of retail holders either panicked, sold the lows, or just tuned out. And that's exactly when the interesting stuff starts happening, because the people who don't tune out are institutional desks, ETF issuers, and on-chain whales who read data instead of headlines. Right now, those groups are doing something specific with Ethereum, and by the end of this video, you'll know exactly what it is and what it means for your position. But first, what is Ethereum really in plain terms? Because it's programmable money explanation never quite lands the way it should. Think of Ethereum as the operating system for the financial internet. Bitcoin is digital gold, a store of value, a reserve asset. Ethereum is the app store. Every DeFi protocol, every tokenized real-world asset, every stablecoin settlement layer, every NFT infrastructure, every institutional smart contract, the overwhelming majority of it runs on Ethereum or an Ethereum-compatible chain. When BlackRock tokenizes a money market fund on a blockchain, they're not doing it on a proof-of-work chain nobody's heard of. They're doing it in the Ethereum ecosystem. When JP Morgan settles repo transactions on-chain, it's using Ethereum-compatible infrastructure. That's the moat. That's why this coin is still number 2 by market cap, despite every ETH killer narrative that's cycled through this space over the last 4 years. Now here's the supply dynamic that almost nobody in retail is tracking right now. Since Ethereum moved to proof of stake, ETH issuance dropped by over 90%. But the staking rate keeps climbing. We're currently looking at roughly 28% of all ETH supply locked in validators. That ETH is not for sale. It's earning yield around 3.5% annually, and the people staking it are not the people panic selling on a bad CPI print. Layer on top of that the fee burn mechanism. Every time the Ethereum network gets used, for DeFi, for tokenized assets, for stablecoin transfers, ETH gets burned. During periods of high activity, Ethereum becomes deflationary. Supply shrinks, and right now, institutional on-chain activity is quietly picking back up. That's the setup people aren't talking about. If this breakdown is helping you think through your position more clearly, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. So let's talk price. The realistic bull case for ETH through the rest of 2026 has a few legs to it. First, the ETF flows. Spot Ethereum ETFs are pulling in institutional capital, and that demand is not going away. When you have Fidelity and BlackRock as de facto ETH buyers on behalf of their clients, you have a baseline of consistent demand that didn't exist 2 cycles ago. Second, the real-world asset tokenization narrative is not hype anymore. It's a $10 billion plus market growing quarter over quarter, and Ethereum is the primary settlement layer. Third, the historical cycle pattern. ETH bottomed, bounced, consolidated. We're in that consolidation right now. If this plays out even close to prior cycles, the $3,200 to $3,800 range is a realistic target before end of 2026. A more aggressive but not insane scenario puts ETH back near $4,800 to $5,500 in 2027 if Bitcoin continues its move and ETH recaptures some of the market dominance it's given up. Those aren't moon math numbers. Those are ranges built on supply dynamics, institutional inflows, and cycle positioning. Now the bear case, because I'm not going to sit here and just pump your bags, that's not useful to you. The honest risks are real. Ethereum has an execution problem in the eyes of some institutional analysts. Solana has eaten its lunch in terms of raw transaction throughput and developer momentum in certain categories. If Ethereum's fee revenue stays suppressed, meaning the network isn't being used heavily enough to burn meaningful supply, then the deflationary thesis weakens. There's also the macro risk. If we get a significant risk-off event, a credit shock, a policy surprise, something that drives institutional money back into cash and short-duration assets, ETH at $1,938 could see $1,400 or even $1,200 pretty quickly. That's not a doom prediction. That's just what happens to risk assets when liquidity dries up. And ETH, for all its fundamentals, is still a risk asset. One more honest concern. The L2 ecosystem, while technically impressive, has fragmented Ethereum's fee revenue. When activity moves to Arbitrum, Base, or Optimism, Ethereum mainnet doesn't burn as much ETH. That's a structural headwind the bears are right to point at. So where does that leave you? Here's my honest read. At $1,938, Ethereum is not a screaming no-brainer buy, but it's not a hold-your-nose asset either. The risk-reward is actually pretty compelling if you have a 12 to 18-month horizon and you're not leveraged. The institutional infrastructure that's been built around ETH over the last 2 years, the ETFs, the tokenization platforms, the staking services, that doesn't unwind overnight. The supply dynamics are structurally tighter than they were in the last cycle, and the $1,800 to $2,000 range has repeatedly acted as a significant demand zone. If you're already holding ETH, the data says stay patient. This is not the level where smart money is distributing. If you're on the sidelines trying to decide whether to enter, scaling in around current levels with a clear stop thesis below $1,500 is a reasonable approach. If you're looking for a 10x on an obscure altcoin, this isn't the video for that. And frankly, that's probably not where you should be looking right now anyway. The path forward for Ethereum is not a straight line. It never is. But the fundamental case is intact. The institutional interest is real, and the level nobody's watching, that $2,100 to $2,200 resistance flip, is the line in the sand that changes the entire technical picture if ETH can close above it convincingly. Keep that level on your radar. Subscribe to Crypto Sayans. We break down the top coins every week so you never miss a move. Hit the bell too, because the videos that matter most are the ones that drop when the market's moving fast.